How do you see today shaping up, Keith? What's your WEX word of the day?
Well, our WEX word of the day is inflection. I think we're at an inflection point for the overall market. Obviously, you just mentioned we have big cap tech earnings after the bell, and then we have the PCE report later this week as well. And we have a lot of markets, especially the NASDAQ, which you discussed, around support levels. So we're around support, and we're looking to see if the markets, if buyers step in here.
All right, Keith, it's our first time talking to you since Sunday. Obviously, the big news, President Biden ending his presidential campaign. Vice President Kamala Harris seen as the front runner for the Democratic nomination. In your mind, does that change anything about the markets or your view about the market?
You know, not that much, Frank. It's really on the margin. There's a lot of discussion in the last couple of weeks. Did we have the Trump trade, meaning the move into financials and small caps? Our view is that's Washington has been actually somewhat overstated in this recent trade. We think it was all about the economy and all about that inflation report from back early July. And since then, we've had this big rotation into small caps outperforming large and tech rotating as well. So, again, on the margin, a lot of our work historically, Frank, says that conventional wisdom around the elections and what happens because of the elections is often wrong.
All right, back to the small caps. So we're looking right here. Over the last 3 months, small caps rallying. We're showing the chart up just about 11%. I know you're, at least in the near term, you're kind of bullish on small caps because they haven't quite reached their highs that they hit back in 2022. We're going to show a chart. It's a 3-year chart. You can see just under the levels it was back in 2022. But is that meaningful? I mean, it's just such a different economy and so many other different factors at play.
Yeah, so the first thing I will say on small caps, prior to that CPI report that I mentioned, they were underperforming by almost 20 percentage points. That's a historic extreme that's only happened 2 times, back during COVID and during the technology bubble. So the rubber band was very stretched. The catalyst was the CPI report. That rubber band, I think, still has further to go because of positioning. And on the relative valuations are still cheap. I think this is a shorter term, 1 to 3 month type of trade. I think longer term, in the fourth quarter, you'll see a rotation back towards tech. But in the short term, I think this trade has further to go.
All right. One other thing from one of your notes, recent rebounds since 2009, basically since the great financial crisis. You have a great chart here. The average rebound after a pullback, remember, we saw a pullback back in April, has been about 19.5%. The median 17.5%, basically. Right now, you're saying so far we've only seen a rebound of about 14%. So in your mind, does that just mean there's just a lot more room to run when it comes to the markets?
Oh, actually, a little bit of the opposite, Frank. During April, during that pullback of about 5%, we upgraded stocks to overweight. And we showed the statistic back then that once you have a turn out of a pullback, the rebound tends to be sharp. So now we're up, off the low is about 14%. So we're approaching that kind of normal return of 17, 18%. So yeah, I think we could squeeze a little bit higher, but then I think as we move into the seasonal weaker period of August and September, that we'll probably have more of a chop. I still think the bull market trend is intact, but it's often 2 steps forward, 1 step back, and I think we're going to be moving into a choppier period as we move into those more seasonally weak months.
So then last question, then we got to go, Keith. Big tech earnings, they begin today. We have Alphabet, also Tesla reporting. How important are those earnings to the overall rally?
I think, for the overall market, they're really important because tech is such a big component of the overall market, as we all know. And as I mentioned, tech has come back towards key support levels. They need to hold here and show some conviction and bounce off of these support levels. So I think it's very important, Frank.